Hi, this is Kevin McPartland, head of market structure and technology research at Greenwich Associates. We are 3 months in now to this crisis, if we assume we really did start in March. Another interesting month, certainly in markets, looking at May. We're going to spend just a couple of minutes looking at the activity in the Treasury market. So I'm going to jump over to market activity. So firstly, let's talk about overall daily volumes. We're back down really, what looks like normal levels. You can see that here sort of as the volume decline. If we're looking at the sort of the blue line here, right from the peak in March, where we had some $1 trillion days right down into May now, where we're averaging $610 billion a day in May. You can see some of the details if we sort of jump into the weekly view, but certainly sort of a steady decline, back to more normal levels, right? You can look back sort of over 2019 and see this sort of $600 billion band is where we're sitting normal. I mean, interesting note, right? You can certainly see, and this data will be in MarketView in July. The level of off-the-run activity certainly jumped as the Fed got involved through March and April. Which sort of shows sort of where they're buying. Usually it's around 25%. It was up to 35% of market volume and off the run. So that was an interesting development. But again, look back to MarketView in July for the details on that. If we jump quickly over to dealer holdings on a similar note, you can see here we're looking at the weekly view. I'm going to do a monthly quick so we can get an easier snapshot. You can see that dealer holdings of treasuries are up slightly, although if we look back to spring, summer of last year, right, it's really not that far off. We're only, we're really right in the exact same range there, 227 there as the number, right, very close. So you would think with all of the treasury activity in the market that dealer balance sheets would be filling up with treasuries, but it seems the Fed is doing most of the work in terms of the treasury buying. Let's go back and quickly look at execution methods. So I think this was another interesting development, right? We saw this jump in voice back here in March as the markets, got a bit crazy. April, it really stuck around, but it looks like we're sort of starting to revert slowly back, I think, towards sort of a more traditional look at electronic trading. The interesting note here, the RFQ number, right, about 28% of volume traded via RFQ is actually back to where we were pre-crisis in the beginning of the year. So that would imply that client activity, at least on the platforms, has gone somewhat back to normal. Where we're really down is in the central limit order book markets. You can see that here, right, about only 23% of markets. We're usually around this sort of upper 30s to 40%. Back here in August, we had a 45% of markets in central limit order books. So it looks like dealers may be doing some more internalizing, for instance. Some of that potentially going on over the phone as well. So while client electronic trading levels, and I can flip over to that chart quickly, are really sort of basically back to normal. You can see this 48%. The overall market, which is heavily influenced by central limit order book activity, is still down from historical norms. And last but not least, we can't not talk about SOFR futures. Let me flip over here in general. SOFR futures got a bit of a boost when the Fed looked like they were going to use SOFR as the benchmark for some of their stimulus programs. That was ultimately sort of stepped back from, and it looks like open interest has actually declined here a bit back to the levels where they were in January. There was also some statements from Chairman Powell about the use of Ameribor, another alternative to LIBOR, that was a viable option as well, which was an interesting development. So SOFR futures open interest are down. We'll have to see if this trend continues. It's hard to know what is really a sort of a structural change and what is just cyclical given the crisis in the market today. So with that, we'll leave it there until next month. Keep an eye on MarketView. The data is updated frequently. Lots to look at and lots to pay attention to as the markets continue to evolve and hopefully come out of this crisis. Thanks so much. Again, this is Kevin McPartland.